All right. Well, happy Friday, everybody. We're going to do a tech check here in just a second, but I am Nick Slavic. I'm the proprietor of the Nick Slavic Painting and Restoration Company. I'm also the host of this show, Ask a Painter Live. It's a weekly live Facebook show where I use my 2 decades of experience as a craftsperson and a business owner to answer questions. Today, we have Morgan Ray of Bookkeeping for Painters on. We're going to get to Morgan in just a second. I do want to take a second to thank the PCA, the Painting Contractors Association, strong underwriters of this, firm believers in standards, firm pushers and believers of financial fidelity and steadfastness in our industry. And the whole conversation today, I assume, will be sort of like has a basis in basic financial foundation of the business, but you and I, Morgan, like to talk a couple levels above that sometimes and talk about the things that cause that to be a good thing. So I'm going to do one quick check here. All right. Well, happy Friday, everybody. Oh, okay. We're good. Tech check here stop talking. But I am Nick Slavic. I'm the proprietor of Nick Slavic Painting and Restoration Company. Go away.
That's a bummer when you're live.
Oh, man.
Bummer when you're live for like 15 minutes, realize no one can see or hear you, right?
Okay. I'll say one thing and then we'll hop into this. I did an hour and 15-minute show where nobody could see me or hear me. And I thought it was some of my best work, but there were 15 people watching the entire time. So
that was your Ask Me Anything.
Yeah, that was
right?
exactly it. I think you even commented, like, it's amazing that you could even get people to watch this. It's like, Morgan, you should have seen me in here. I was doing my best work. I was, oh my God, big thoughts. And
I was like, I was sitting watching it, and a lot of people, I think, thought you were going to go live, like you were testing something. But I was really impressed by like how committed your audience is to waiting. People, because I initially, I think I was like, does Nick know that, is the audio of the video is not working? And they were like, just wait for it. Just wait for it. They know that good stuff's coming.
We're not going to waste any time. Morgan Ray, who are you? And then we're going to talk about bookkeeping for painters.
Yes. Well, who am I? I'm a managing partner over here at Bookkeeping for Painters. I am based out of Tucson, Arizona, but I am a native Houstonian, so originally from Texas. My background is in entrepreneurial management, so that's what my degree is in. I was really, really interested in that study track and in that element of business because I've always been really fascinated with strategic management theory, organizational development, and nerdy as it may be to admit, quite a bit of business law. So that kind of ended up evolving into being really interested. Yeah, Texas. That evolves a lot into being really interested in the accounting world, purely as a means to an end, I guess. And the means that the end that I was after was, I recognize that, the financial reporting and the accounting is really the best foot in the door to getting to have all of the fun conversations with business owners about operations and strategy and getting the business where they wanted it to go. I'm really interested in thinking about all different kinds of components of life and business as kind of an experiment. And if we're experimenting on things, we've got to take a look at the data to figure out what are the impacts, who are doing things better than we are. Can we hone in on the factors and what they're doing? So that's really the area of interest that I come from. And then over here at Bookkeeping for Painters, where I work with a couple of really great partners and a really great team that has grown substantially over the last year. We are a fully virtually based accounting services firm that specializes in painters. It's right there in the name. So my business partners, Daniel and Melissa, founded the company about 6 years ago because Daniel was a former painting business owner. And so whenever he wanted to apply his education in accounting to accounting services, he wanted to just make sure that we were working with businesses that we knew really, really well. We could add the most value for them. So everything that we do is geared towards helping businesses, on one hand, convert all of their record keeping and document management onto the cloud because it makes things a lot easier for everyone, streamlines a lot of things, makes the reporting a lot more accessible for everyone. And basically helping business owners, get a handle on the nuts and bolts of how the processes for good accounting work, and then tying it back to reality. Like, how does this reporting actually impact, or what does it mean for me on the ground? What does my business look like compared to the rest of the industry? So that's kind of where we fit in.
Oh, that's awesome. So it's not just you balance the checkbook, here you go, good luck. It is that thing. It's the strategy. It's all that other stuff kind of wrapped in there.
Yeah, it's definitely about trying to help business owners really understand, what does this mean? Are you financially healthy? Are you getting what you want out of this? Are you on track to achieve your goals? So that's a really big part of kind of where we start talking with people is, where are you wanting to take this? What does this look like for you on the personal side, on the professional side? Let's kind of start there and then work our way back to where are things right now? What can we do to, on one hand, take a lot of things off of your plate right now so that you can focus on operations, so you can focus on being a leader, but also, give business owners the confidence that they're making really good decisions because they have really good information to make those decisions on.
Do you think, you mentioned helping painters meet their goals. Do you think most painters know what their goals are?
That is a great question. I think it's really easy for people to kind of get caught up in the obvious goals or the things that they think are obvious that everyone's after. So like being profitable, right? Making money. But I think that a lot of the times whenever you stop and you ask people, what's the end goal here? Like, where do you want to grow it to? A lot of people might say like, oh, I want to double the business in a couple of years. But when you kind of have them pause for a minute and ask them, well, then what? You start to see the gears crank a little bit more. And I think that actually that's one of the things that I really like about groups like PCA and going to events is that that's always a really big part of the conversation with people. When you're thinking about learning how to be a better leader for the business and how to develop the business more, you're suddenly surrounded by all of these other people who have slightly different takes on their businesses and different lifestyles and lives, but you can kind of see what success looks like for other people and kind of pull that back into what do you want your life to look like? What do you want that work-life balance to be? Maybe I don't want to grow my business into this, $5 million a year commercial business. Maybe I'm really happy keeping it at 1.5 to 2 million because then I can comfortably step away from it sometimes and, travel with my family for a month out of the year, that kind of thing.
Yeah, it's interesting. I think, we probably have similar perspectives because we get to talk to so many painters and you guys take deep dives into their financials. And I just sort of skim the top and look for the spooky ghosts in their stuff. People come to me with dumpster fires and they're like, please just make it stop. And then it's like, well, okay, we stopped the fire. You should probably talk to Morgan now because I'm not going to balance your books for you. But it seems like painters have this nebulous goal. And when I like that because you guys have probably similar discussions that I do, which is they experience a problem and they kind of get stuck in this problem solution loop where here's a problem, here's a solution. And then it's just problem solution. And something that I use with my team is let's go 3 levels up. Let's do something to make sure this problem never shows up. Same thing with the goals. They say the goals always seem nebulous. They feel like the business should be bigger, probably so they make more money. And they sort of maybe want the option to not actually paint in their business. But those 3 things circle around in some weird nebulous thing. And I'm not sure that they connect those 2 dots with a cohesive thought sometimes. And it's something I've experienced over the years.
That is a great point. And I think that your description of that is spot on when you say that it can just get really nebulous. And the way that I think about that and the framework that I think about it is, I think that that's part of why the traction system and the scorecard system really caught on and resonates with people because, on a macro level, when we're talking about the business org development in our own lives, but also when we're talking about role design on an employee level, it is really easy to jump into running a business or hire somebody into a role and say, hey, we're going to go do this thing, we're going to make money. And nobody really have a clear picture on what are the actions that are going to achieve that goal. What does success actually look like for me right here? And what are the critical action items that are going to get me to that success? So I feel like that framework of the scorecards was really enlightening for people because it reminded them that, it's not, saying that we're going out here to make money is not really, it's not clear enough, right? There's not enough clarity on that. But when we can break it down to really concrete action items that we should be achieving to get to those end goals, that's a lot easier for people to wrap their minds around. So that system's incredibly useful for role design for employees. And a big part of what we do, and a lot of the coaching and consulting firms that we work with, that we share members with, because we basically will handle the nuts and bolts so that you can use it for the coaching and the work that you're doing on operations. That's a big part of the conversation of what they're doing is what are the financial goals? How do we break that down into really specific critical action items, at a high level? And those systems are really, really impactful and really useful.
So you mentioned Traction, and I am a huge fan. I do a little bit bastardized version. I've taken like the three main things from it, but what you said there was Traction forces you to say, what's your goal a year and 5 years? And what are you actually going to do between now and then? And that's the sort of practical thing that I like, because it makes you actually say, oh, if I want 10 employees, we're going to have to start doing something right now. You don't just hope that you don't just wake up a little earlier and try a little harder. And it actually makes you face those things. So I like that thing a whole lot.
Yeah. And it makes you kind of sit there and say, well, I want to have 10 employees. And it's kind of like, well, why? Like, what's the why behind it? What are you trying to achieve with that? Sometimes it's like saying, when you stop and you ask somebody, well, why do you want 10 employees? They might say, oh, well, it's because I want to do 3 million a year in revenue. And you say, well, if you want to do 3 million a year in revenue, is having 10 employees actually what you need for that? Or do you actually need 7 employees and maybe some subcontractors? And, you can kind of break it down into, that's the thing I think about whenever goal setting and achievement gets really nebulous is, it suddenly becomes really easy for us to fixate on a single idea that we think might be effective, and then throw all of this energy and time into pursuing that without even stopping to analyze, is it the most effective thing for what we're doing? Or are there maybe other solutions here in this space that we're not even exploring because we're just, full force into this one thing?
Who would be a good candidate to come talk to you?
Oh, to come work with us at Bookkeeping for Painters.
Yeah.
So our target audience and most of our clientele are going to be businesses that are doing between 500,000 a year in revenue up to about 4 to 5 million a year in revenue. So that's really the sweet spot in the area that we work with. I think businesses get a lot of really great value out of us whenever they're in that range, because they're at the point where they can reasonably outsource the bookkeeping and it's not going to be too much of a cost impact on them. And they really need that information done really, really well for them in order to get to that next level. So I find that a lot of businesses come to us when they hit that inflection point where they're like, I doubled the business from 200,000 to 400,000 last year. I want to double it again. And I know that now I need to level up some of my systems and I need to get things a little bit better. Or we'll see a lot of businesses that have been really stable and might have been doing accounting and things internally for 10, 15, 20 years, family-run businesses that are now looking to modernize. So they want to move away from desktop systems. They want to convert to online. We do purely socialize. We purely focus on QuickBooks Online and helping businesses move all of their record keeping online. So a lot of businesses want to do that because they integrate a lot better. They can automate a lot of things on their sales cycles. So we have a tech integrator on our team who's my business partner, Daniel, who helps businesses kind of automate certain parts of the accounting and how they tie into the CRMs. So that's a big thing that a lot of businesses get a lot of use out of. But for any smaller businesses, we actually have a lot of startups. We have a lot of people that come in on some of our primer plans. So they're having the bookkeeping taken care of for them. We can still get them some reporting, and it's really reasonably priced. And then they can work with us for taxes. So we're a full service tax firm as well. And that's really useful for a lot of businesses, even when they are in that startup phase, because it's worth it to them to just not have to think about the bookkeeping and just know that everything on the financial side, all of the tax stuff is fully taken care of for them. Whereas some startups get into a little bit of trouble kind of playing catch up or being reactionary to that type of thing. So I'd say, pretty much anywhere in there. Anyone who's smaller and isn't quite ready to fully outsource the day-to-day record keeping, we still have a lot of those that just come to us for taxes because we do a thorough review at year end, or we'll help you kind of compile your financial record, even if you're not doing it monthly. So that's a kind of a good middle ground.
Perfect. And Jason asked the perfect question at the perfect time, and he's got a follow-up here. Terrible at doing bookwork. Is it feasible to hire a service? And you just sort of answered it like, yes. What you guys do will pick up a company somewhere between 4 or 5 employees plus, it sounds like, and then take it from there. Now, not to say that you need 4 or 5 employees to outsource your stuff, but coming from somebody who's ran a 1 and then up to 25, between 1 and 5 employees, there was not that many transactions that I couldn't do it myself. And I'm no genius financial person. I am not good at compliance. I'm not good at paperwork, but I was very curious to see what came in, what came out, and what was left over. So every week I would just, I mean, there's so many things you can do this, but I would almost challenge 1-person, 2-person, 3-person businesses, do it yourself. So you know how to hold somebody like Morgan and her firm accountable later on. You can feel the numbers, even if you're not good at it. When I was a single person contractor, I maybe only had 15 or 20 transactions in an entire month. That was all my money coming in, all my money coming out. That's easy you can almost memorize that stuff and remember each transaction. So
I think that's a really good point. I think that once you've done it yourself, or you've tried to do it yourself, or you've tried to have your spouse do it, or somebody on your team, you have a much better understanding of how difficult it is. So I do find that we have a lot of people that gratefully transition to us because they're like, I've done this enough and I don't want to do it anymore. But to answer to Jason, to anyone else who might be listening that is not quite at that size that I was talking about, that I tend to find is our, clients that are really ready to come over to us. We do have a lot of startup clients, so I don't mean to make that sound like we don't take those on, or that's outside of the goals for people. So just to kind of throw it out there for everyone, all of our pricing for services is based on revenue tiers, and we have a few different types of packages in the way that we do it. Services every single month start at $295 a month. So when you're at the point where you think you could reasonably budget out $300 a month to just not have to think about your bookkeeping and accounting anymore, then we're a good fit for you. If you're not quite there yet, then we might be the best fit for you for taxes, because like I said, we actually just give you some guidance on how to effectively do your bookkeeping really quickly on your own. Even if you're not using something like QuickBooks Online, one of the things that I talk to a lot of smaller businesses about, and I think you and I were talking about this a little bit as it pertains to job costing, is some really simple, straightforward advice for anybody who's at this point where they're doing it on their own. Would be really, really conscientious about keeping your business stuff separate from your personal stuff. It's going to make everything a lot easier. It's going to really protect all of your business assets. But when it comes to the bookkeeping, when it comes to taxes, what that means you can do is, like, you don't even have to take the time to learn the software. You don't even have to fuss around with QuickBooks Self-Employed, even though they try to make those pretty user-friendly. You can go to your bank once a month at the end of the year, if you really can't face it on a monthly basis, and just get those spreadsheets exported straight from your bank and then do some quick sums. You know what I mean? You can sum up your expenses, you can sum up your income, you've got a quick gross profit margin, or your net profit, and that is not super hard for you to do, and that is about as much information as you need to successfully file taxes.
So I'm so deep into this, Morgan, I completely forgot you can, problem solution, finances, money, what do we do? And then you can find a solution. But the 3 levels up, in order to create a maze where you don't have to mess with this, open up a separate business checking account, and then all the checks your clients give you, put them there. When you pay Sherwin or Benjamin Moore or Hirschfield's, put it there too. And there it is. It's self-contained. And, when you only have 15 or 20 transactions, I do this on a simpler basis. We have about maybe 150 transactions a month, just to get some quick gross profit numbers. Sometimes you do that. You just go to your bank, download the Excel, take out a few little weird things, sum totals here and there. And you can, even for a very complex company, you can get those things. So that's perfect. That's one of those things where, honestly, probably not the best advice, Morgan, but if you have a business checking account, do that for an entire year, and then just say, hey, accountant, tax time, I have this business checking account that contains everything. No weird personal stuff in there. I mean, honestly, that's not the greatest thing to do, but that is a self-contained thing.
It's a completely legitimate thing to do, though. And so obviously you want to be good about, if you're doing that for tax reasons, you need to be collecting receipts and stuff like that. But, the receipts aren't something that you have to give to your accountant and have them dig through it. So, like, a little industry secret here, most of you guys that are kind of doing your own bookkeeping, or if you're not really doing your bookkeeping and you just go to your accountant at the end of the year and say, here's all of my things, can you make this work for taxes? They're charging you a lot of money most of the time to do exactly what I just said. They just pull spreadsheets from your bank and they do some simple sums. So kind of whenever we have clients that come to us with that, I basically just give them a template and I say, these are like the 5 buckets of expenses that I'm interested in. This is the income that I'm interested in. Let's talk about your home office. and they give that information to me, and you don't have to pay me anything extra to generate reporting for you, because you can do it pretty easily with just a little bit of guidance. That was one thing that I really liked about the discussion whenever I had the chance to come up to the War Room Masterclass a couple months ago. We were talking about job costing, and in the office. So job costing, obviously, for really important reasons, is a huge focal point of yours, and I think is a really, really great thing for people who are kind of taking those steps to get to formalizing their bookkeeping, figuring out their financials. Job costing is absolutely the best place to start, because the information from it is so useful in how you're running the business on a day-to-day basis. Whereas what we were just talking about for taxes is like, it's a compliance thing and you have to do it, but it's not really helping you be better as a business owner. So one of the things I mentioned at your War Room Masterclass that people might want to think about is, the habit forming around job costing can be really hard for people to get into. It can seem like a lot of front loading if you're having to sit down and you're having to type up numbers in a spreadsheet for every single job. So one of the things that I kind of recommend to people is, if you have a simpler business, you might contemplate just getting like a dedicated checking account and debit card, or a dedicated credit card that's purely for your materials purchases for jobs, because that can make it a lot easier for you to get those sums and get those totals on a weekly basis or on a daily basis for each of your jobs and your project job costing. So that rather than having to maybe, manage a ton of receipts, and then you have to sit down once a week or once a month to try to fill out your spreadsheets for the job costing, you can pull that spreadsheet from that dedicated credit card account, and you can just go in and say, on a daily basis, this 1 week we were on that project, you've got the total right there. You don't have to juggle the receipts. You don't have to retype them into another spreadsheet. You've got that there. So I'm a big fan of bastardizing other people's systems to make them a little bit easier or workable, depending on your scenario. So that's how I would imagine kind of adapting your spreadsheet system, Nick.
So we don't do bookkeeping. We don't do job costing because we do it for the love of the game. We do it with a goal in mind of knowing if our business is actually functioning correctly. So the goal of job costing, and correct me if I'm wrong, is to measure the amount of materials and measure the amount of labor per job, compare that to some other benchmark that we know that will meet the goals of our business, to actually give us one of these or one of these for every job, so that we can correct our processes in order to make money. Yes, no?
Exactly. And that's, I think, the part that people sometimes sort of lose the forest for the trees, is that the idea is that you need to get that information about jobs quickly enough that you know what went wrong if something went wrong, so that you can make those adjustments. It's a lot harder if you're doing it once a month and you're looking back and all of the details are kind of running together and you're not really sure why that one job didn't fall in the margins like you thought. It's not easy for you to make that corrective action. So I do think that that's part of why, finding some way to make it a little bit easier on yourself so that you can do it more consistently will really help you get actionable information, rather than don't just go through the steps because Nick tells you to do it, right? Like, actually figure out, how is this going to make a meaningful impact for you? And
we should give the perspective too. Again, sometimes I get too deep in the weeds. I forget to put my head up and say, when you take your stuff to get your taxes done, that is not internal financial stuff. It's something, and it's one way of judging your business, but tax accounting is not internal accounting. And it's not something you're going to use to say, we should charge more for exteriors because we're losing our tail. If you take go ahead, Morgan.
Well, because when you think about it, the whole goal behind, if you have a good tax accountant, when I'm doing tax strategy, my goal is to make it look like you're making as little money as possible on paper.
Yes,
that's not a good overlook of how your business is performing, right? Some of the best performing businesses I work with, due to the way that they, do some purchases in a given year, and we accelerate some different expenses and depreciation, they might look like they didn't make any money at all. And that, in reality, at the end of the day, they made $150,000 that year. Perfectly legal tax avoidance. It's just good strategy, but it's not. That's a totally different system. It's a totally different end goal than like the managerial accounting like we're talking about. So that's really the thing that I would say makes bookkeeping for painters really unique compared to a lot of other similar people in the accounting industry or bookkeepers, is that while we do handle all of the tax compliance stuff because it's necessary for businesses to have that holistic view of health and helping business owners not have to deal with it on their own, primarily what we're interested in is helping business owners get the detailed information, like the really good data, so that you can sit down with your controller, you can sit down with your project manager, or the ones that you're looking to hire in a couple of years, and really break it down into, we've got a few different divisions of the business. We do painting, we do pressure washing, we have a little bit of handyman. How profitable are each of these different pieces? When I sell one of these jobs, is it making me more money than if I sell another one? And if I'm selling, if I'm selling pressure washing work that has really, really high margins, and also it's not that expensive to market, I get really great returns on all of my marketing funnels for that. Suddenly becomes really easy to know how you want to invest in the next year. Your strategic planning becomes a lot clearer.
So we should say too that, great, you have the most masterful, complex G sheet for job costing and for other KPI tracking. But you only do it once every 3 months. Turning it into a habit, into something that you do every day, every 2 days, every week or something, there's the key. It's just like with SOPs. The buzzwords in our whole industry, systems and processes. Who's got systems and processes? A system or a process is a checklist for how to do something. If you write the most masterful SOP and throw it in a drawer and never look at it, it's useless. So habits. I found that, especially with my production managers, salespeople, and myself, it's not that we have these whiz-bang spreadsheets. It's that we do something with them regularly. Yes?
Yeah, I mean, that's definitely the first piece of it. But the second piece is, I think, understanding the purpose of what you're doing. So I think that that's what's like, I loved that we started this off with talking about traction, and you were like, I kind of bastardized that system, adapted it to my own use. I'm actually a really big fan of looking at these really cool, innovative, and effective business systems that we all see. Traction's a great example. Profit First is one that we deal with a lot, that there's really, really great principles and purpose behind how these systems are designed. And a lot of people and business owners do really well using them in their business, but it can become easy to kind of overly systematize or get too sucked into the individual steps without really realizing what the overarching goal is. And I find that that's the risk that business owners face when it comes to these systems, is that you try to implement someone else's SOPs or someone else's process so exactly that something breaks down, and then it becomes really, really demotivating, and you don't really stick with it. And then it doesn't really work for you because maybe you didn't realize what the goal is. You could adapt it in a way that is better for you, and you're still achieving that goal, even if it's not in exactly the same way. So like a good example would be the Profit First system, like we were talking about. It's kind of complicated, 5 or 6 different accounts, and you've got to do a really good job projecting what your expenses are going to be and what you want to make for your profit, and you've got to schedule these transfers and stuff to really take advantage of how it's designed. But a lot of businesses do really well with just saying, hey, I'm going to take 3 accounts, 4 accounts. I'm going to have my operating expenses, my payroll account. I'll set some aside for profit. I'll set some aside for taxes, and put them somewhere where I'm not seeing it, not thinking about it. And they're getting the same impact that Profit First offers people, which is like it's really built around your spending psychology. You plan for profit and you set it aside, so you're not spending it. You're looking at a limited budget for any of your materials expenses or investments in your business, and they're getting the same impact without having to get too sucked into what that process looks like, and then potentially failing and not getting any of the benefit because they feel like they failed.
So I should say too, anybody who's got questions for Morgan about anything about this, and not just financials, simple stuff like that, any of this stuff, we haven't even scratched the surface of the stuff that we normally talk about, Morgan, which is some pretty nerdy deep diving stuff. So any questions you guys have, type them in here. We'll be firing them on screen and having Morgan take a crack at them when we find that too. So
yeah. I did see one question that came in from Alan, where Alan, awesome. So breaking down financial goals to monthly and weekly and not just yearly. Good question on that. One of the things that I think works really well for financial goals, budgeting purposes, is it's really, really good to have an idea for your revenue goals, because like we were saying, revenue goals are the first starting point that you need to kind of figure out what those critical action items are for your sales team or for you as an estimator, and then your production team after that. So revenue would be something that I might see broken down possibly weekly, but most likely monthly. Weekly might be a little too granular. You know, if we start trying to like break down some of these financial goals on a weekly basis, and sometimes I even tell clients that on a monthly basis, you don't want to scrutinize a single month's financials too closely. We typically look at things on a 3-month rolling average, because that's a much better, because of the way billing falls, you know, the way that you pay your expenses and the way that income trickles in sometimes from clients. A 3-month rolling average is a much better perspective of your operational health. So whenever it comes to your goal setting, you want your goals to align with how frequently are you going to be able to like update and review the information. So I'd say monthly is a really good one to keep an eye on. You know, yeah, I'd say monthly is probably the best place to start, and really pare down into it. What would you say, Nick?
Yeah. So, probably, I'm trying to think about what I took from Traction. The thing I probably took the most was the reminder that if you want to make $1 million this year, then it says, well, okay, well, that's pretty simple. Here's what we're going to have to do per quarter, and then per month, and then per week, and then you get to day, and then you divide by the number of employees, and you're like, oh, okay, now we're getting good here. This employee has to create this much revenue per day going out there, and you can actually plan jobs. We're to the point now with my leadership team where we can say, listen, we need 40K weeks. What jobs can we place together, and which crews are good at them? And let's take all these little puzzle pieces and move them around this week, and let's plan a 40K week. You know, and you can actually, I think, you know, again, problem solution. 3 levels up is intentionality. If you address it, if you measure it, if you hold somebody accountable to it, magically you'll probably get a result. And the same thing is, you want to create $1 million of revenue this year. If you just wake up a little earlier and try a little harder, you're not going to do it. You got to actually have that plan into place in order to say, okay, today, what do we need to do to get there? You know?
Yeah, I think that's a great clarification, because it might be that our financial goal, we start off with the annual goal, we break it down into quarters, into months. We know that maybe summer months, we're going to have a better chance of hitting some higher goals, so you can kind of make those adjustments. And that translates down into critical action items by the week and by the day. They might not look financial on the surface, because they might be what we think of as operational. What are the things that my workers are doing? How many sales calls and how many appointments is my estimator going on? Might not seem like a financial goal that you need to be hitting on a daily basis, but it feeds directly into those longer term financial goals.
I am doing that with my high-speed estimator this afternoon. We're getting our goals aligned for the year, and we are going to give him a financial goal. We have an average job size, number of estimates that he's going to have to do, cost per lead, marketing budget, and then when to spend it. So again, it's as simple as getting a credit or a debit card for your materials and just tracking that stuff. Once that's done, then you find the next thing, and then you find the next thing, and then you find the next thing. And now you can, again, when we take 9 steps back from this whole conversation, Morgan, the things we're talking about now is the base of the pyramid of all the questions you've ever asked about running a painting business. What do I charge for this? How much should I spend on marketing? When should I hire somebody? What should I pay somebody? All this is in these numbers, if you parse them out enough. I mean, it is all there. Even from a simple thought experiment that I've got a lot of traction with solopreneur painting companies, their biggest question is, what do you charge for this? You can actually do this weird little thought experiment, and we say, well, what do you want to make this year? And you can take $120,000. A single person painter should probably be able to create $120,000 of revenue. There's 261 working days a year. Divide that by 261. You have to create X amount of revenue a day. How much do you charge for a bedroom? This thought experiment always goes along the line of, you need to create $484 a day if you want to reach your goal. If you charge $400 for a bedroom, paint a bedroom and then some a day. That's not a hard goal, but you can bring this whole weird thing down into this, and then they can actually like see. Now, that's not perfect. That's not a financial goal. It's just a way of taking something that's weird and big and scary and saying, oh, if I do this today, I'll be on track for the goal.
Yeah, because at the end of the day, what we need to do to be effective is really break things down into their constituent components, so that we're not totally lost about how to get from here to there. You know, we know we've got the little steps outlined in front of us. And I think especially when you're growing a team a little bit, and you know, when you're learning how to motivate other people to kind of get the business to those financial goals, that's one of the things I really like about a scorecard type system that is focused more on action items rather than maybe financial goals, is that I think it can be really easy to get, singularly focused on, we want to sell $1,000 or 5,000 or 10,000 a week. And it can be really demotivating for everyone. It can be really frustrating if we're not hitting that for whatever reason. But it's a lot clearer if we know that the goal is to be making, 5 phone calls, knocking on a certain number of doors, doing a certain number of appointments, certain number of follow-ups. That's a much more tangible goal for people to reach. And then the numbers will follow that, right? And so it's not as demotivating. I think it's a lot easier to get employees on board. So I kind of think like financial goals are for the business owner to worry about. And I almost say numbers maybe don't even come into it as much when you're talking to employees. We're talking about action items with them.
I like that a lot. Taking something that a lot of you and I are nerds. We love the numbers and stuff, but yes, turning a number into a thing is a great thing. And I would absolutely agree with that. Do you mind taking Alan's question here too? I don't want to get too far off subject, but I like this one. What percentage do you use for personal take-home pay and what stays in the business? This is sort of a nebular question. I have some different thoughts, but when somebody comes to you with something like this, how do you help them figure out what they're trying to get to?
Yeah, a really good question, Alan. This is where a lot of painting businesses start a conversation with us. And my response to them is, are you hoping to grow the business, or are you happy with kind of the way that the business is right now? So if you're happy being a solo painter, you might be netting, 100,000 a year in revenue. Or I'm sorry, you might be taking home 100,000 a year, and your revenue is going to obviously be a function of that. But that might be totally sufficient for you, at which point you don't need to keep reinvesting in the business if your goal is to just kind of keep a steady state. If your goal is to keep growing the business, then I would say let's talk about what that next growth stage looks like. A lot of the times this reinvestment back into the business is not something that we do at the end of the year. We're not like looking at, these are the profits, you get to take 7% here, and this other 7% is going to go back into the business. It's something that's very gradual. It's in your spending on a monthly basis, when you're hiring a sub, when you're budgeting for that new employee. So yeah, again, very nebulous, hard to say. I don't have a specific percentage for that. I would say let's start with your goals. Are you looking to grow the business? And then if you are, what dollar amount is it going to take to grow you to that next step? That amount of money is going to have to stay in the business. If you want your take-home pay to stay a certain amount, now you know what you've got to start earning.
That's perfect. It's perfect. Something along this line too, to start getting a true job costing. Like I think, God, there's like 6 thoughts floating around. I'm trying to be smart enough to put them into one cohesive thought here. A lot of times people, I want to have a discussion about the money that comes into your company versus pay versus profit. And a lot of the times the biggest awkward conversation in our industry is somebody who says they make X profit when we're not talking about the same thing. So revenue is all the money you make in your company. Your pay is what you pay yourself. Now, when you get to a certain size business, your accountant makes you be your own employee. I am an S Corp. I actually pay myself my own paycheck, which is goofy, but it helps assign something to that. In a single person painting company, people consider profit the money left over on January or December 31st. Profit is something different than owner's pay. I always think about the conversation like, if you have to pay yourself something, because if you weren't there, you would have to pay somebody to do that something. If I wasn't here in this company, if I didn't pay myself my own paycheck or assign some sort of labor cost to what I do, you can't call everything left over in my checkbook profit, because if I wasn't here, I would have to hire somebody for that. So when this is how the discussion goes. I made a 46% profit this last year. I have questions. We need to be talking about the same thing. This is profit. And I think I'm circling around the same question. I still don't think I'm there. Profit is what you have left when you pay yourself, when you pay your vendors, when you pay your employees, when all your expenses are paid, including your own pay. That is truly a profit. If you have $10 left over in your checking account, that may not be profit. They may just be pay to you, give or take.
Yeah. Exactly. And then the trick there, and I think you really did a good job of explaining that, is that you need to think about your owner's pay or your employee pay as being a comparable amount as what would you have to pay somebody else to do that exact same work? If you were to just completely leave the business and somebody else was doing everything that you do in day-to-day operations, whatever's left after that would be the profit. Yeah, it's hard, because the jargon can get so convoluted sometimes. The way that we talk about it with business owners is we refer to net profit, which is that. It's like after an owner pays themselves, net profit is what is left outside of the business. And we've got goal lines for that. And then we talk about discretionary earnings. And discretionary earnings is how we refer to that net profit number plus your owner's pay. Discretionary earnings, we've got some flexibility there, and it's going to kind of change the goal lines for that depending on what you're doing as the business owner in the business. In general, the healthy benchmark for discretionary earnings for most painting businesses with a single owner operator is about 15% of your revenue. And we tend to think about that as being about half of that towards owner's pay and about half of that should be net operating profit.
That is a number, Morgan Ray, that I've been trying to put my finger on for years. I've been digging into solopreneurs' finances with them, and it seems to go all over the place because some people have a shoebox, some people have this. That is a really good benchmark. Thank you. And I'm going to use that, by the way.
Yeah. And that's actually what we would consider like the healthy goal line benchmark. If we're looking at averages, so we source industry averages that we purchase, the IRS tracks all kinds of things. A lot of individual consulting firms and such do too. Honestly, what we really see, but the true averages for a lot of businesses is probably closer to 9 or 10% is what a lot of business owners are taking home in total. That is what they're paying themselves and that's their profit. But that's not it's not the goal line, right? 15% is what we would say is healthy. If you're hitting that 15% mark, your pay plus your profit, so it would be everything that you earned that you are taking home as the business owner at the end of the year, that's healthy. But like as you and I know, and as we talk to a lot of interesting people in the industry when we can make it out to events and stuff, there are some people who beat those margins by a mile. I have clients and I have met a lot of business owners. They are taking home 40 to 45% of the earnings of the business. And we're not talking about small businesses either. So it's pretty incredible to see the variety of business types out there.
So Alan, I will say this, your question delves into taxes. I had a meeting with my CPA this morning to close out 2020. Listen, whoever does your taxes, talk to them. I know, Morgan, you can answer this, but there are so many complexities and so many weird words associated with this. It goes into so many different areas. If you want to delve into it, do it. But otherwise, please have a professional do this.
Totally fine. So this question is a really good one. It's not actually in the realm of tax advising, but it's a great clarification because a lot of business owners are really confused about this. And I think what we're kind of getting at here is when you're a business owner, especially when you're a solopreneur, you're running the business. If you're not an S corp yet, you're not paying yourself through payroll with a W-2. You're just taking money out of the business bank account to live on, right? A lot of business owners are confused about that. They think that the amount of money that they're taking out of the bank account is what they're being taxed on. And so then they are reluctant to take money out of the business bank account because they think that that's what they're gonna have to file taxes on. And that's not how it works. So when you're a solopreneur, you're what the IRS calls a pass-through entity, or in some ways it might be referred to as I can't think of the other term right now. Pass-through entity is basically the phrase that you want to be familiar with. And what that means is that the business is the same as you. Whatever the business records as a profit, whether it's sitting in a business bank account or it's sitting in your personal bank account, that's what you're filing taxes on. Now, where you want to be careful is that when you're running a business, let's just say that you maybe aren't profiting quite as much in a given year and you keep taking, maybe you've got a loan out, you've got like an SBA loan, and you are taking out some funds from the business to live on, but you're taking out more than the business is profiting. When you're doing that, you start to run into capital gains territory because you basically you're taking money out of the business that the business has on loan. So at that point, you're going to get a little bit of extra tax there. So, I tell everyone, you want to make sure that you're not taking more money out of the business than the business is earning and profiting. But don't be confused. Don't think that if the business is running healthily and is profiting, your tax bill is not going to change based on what you're taking out of the bank account week to week.
And you clarified it better than I could. My knee-jerk reaction was, how do you classify or clarify, or how do you think about that money? Really, what I had a deep discussion about with my accountant today, which is what you did too, which is your business at these entities, unless you're a C corp, the business is you. Everything just passes down to you. My business doesn't pay taxes. It just flows right through into my personal account. So take out money from the business, it's still offset by your expenses and it goes through. If you take out $80,000, you're not going to be taxed on $80,000 if you had $60,000 worth of expenses. So that's sort of the general discussion there. So sorry, you did that way better than I could. So.
Well, it's my job.
I have a very simplistic human view of all this stuff. I like job costing a heck of a lot more than I went to college for all this stuff. I minored in tax accounting and managerial accounting. And I did that. I did that so I would never have to do it. So I could hold my accountant accountable to their things. And I knew we probably have more in common than not, because I approach the finances as, you got to know this stuff, just like you got to know the molecular structure of some paint to be a master craftsperson. It helps you understand the deep dive stuff. You don't have to deal with it all the time. It gives you that base. I love the numbers because I know just enough to know I am never doing payroll. I am not touching that stuff. It is the grossest thing on the planet. I'm not going to try. Somebody else do it. And I have enough knowledge to make that decision.
Agreed 100% on that. It's so interesting to hear you talk about your background though, and how your thought process going through school, because I was kind of the opposite, right? Like I did a business administration degree, had to do all of the regular accounting and finance courses, hated that stuff. I did not like managerial accounting. I was great at it. I was always really good at it. I'm sure I helped at least a third of my class pass, not to brag, but we were study grouping it up. But I was doing it because I loved all of the theory. I really, same thing about economics. When I was coming through school, I was like, oh, economics is miserable sounding. But then I started to get really into the theory behind economics, behavioral economics, kind of how the psychology plays into it. So that was always really my interest. And I never wanted to I always thought being a CPA sounded miserable. Here I am now. I actually am just now processing my enrollment with the IRS. So I'm going to be an enrolled agent here in the next few weeks, which is very similar to being a CPA. I would have just kicked myself as as a young person coming up through it, until I realized that really it's just a means to an end to get to all of the really interesting stuff. So, happy to do it.
So one of the last things I'm going to ask you, Morgan, is wave the magic wand and change one thing that all of us painters do to make our lives better. But first, I want you to have the option to talk about a topic. I've been kind of directing the conversation. What would you like to address before we get to the magic wand question?
That's a hard one. Yeah, like you said, when you and I sit down together, we dive off into some really nerdy directions. One of the things that I have been really fascinated with lately has been habit theory, which we did talk about a little bit today. I mentioned that I've always been really fascinated with, behavioral economics and behavioral business. And for anybody that's not super familiar with that terminology, basically what I'm talking about there is that there's now this whole body of research from the last few decades all about the psychology behind why people do things, and decision-making theory. It has come a really long way. So I've always been really, really fascinated in how the financials and things flow into helping us make better decisions, and basically using these systems to check our gut instincts. Because what we've learned from decision-making theory is that your instincts are probably pretty terrible. You're not
Morgan, my favorite, data plus feelings.
That's why you and I get along so great, Nick. So I think that, the best way to kind of summarize all of that, we could go down a million different rabbit holes. And I'm sure if anybody catches up with you and I at the next expo, they're going to walk in the middle of a conversation about that. But you master what you measure is really a great way of paring that down, because what that means is when you are paying attention to specific things, well, for one thing, we know that you really lend more importance to the things that you're paying attention to than they might have. So you have to be really thoughtful about what you're paying attention to. what are the things that you're tracking? What are the goals that you're measuring? And are they actually going to get you where you want to be as an individual? Is your sales goal for the business going to make you happier? If you master what you measure, which I think we all agree that you do, make sure that you're measuring the right things for you. Question, reanalyze, and change your goals if you have to. Don't be afraid to change those goal lines, because it's not all about the sales goal, right? It's about your life and your experience. And that would probably be the thing that I would say if I had to change anything, or if I had to recommend a change, it would be really thoughtful about how you want to live your life and your day-to-day experience. One of the greatest conversations I got to have at your masterclass was with Marcel DeBleek, and we had a great conversation where he was talking about, how much he loves going in and starting his own business, because it gives him the ability to go home at a reasonable time and cook dinner with his kids, because he loves to cook and he loves to do that with his family. And he's not willing to grow the business so quickly that he can't do that. He is happy to take a measured approach to his business development because it's giving him the lifestyle that he wants. And now he can start adding employees on it, but also get that lifestyle factor. That way they stay with him.
No, I agree. And again, even when somebody says, what should I charge for this? When do I hire a first employee? You got to go 7 questions back and say, what do you want? There was such a great discussion in the Business Brush group maybe a week or 2 ago where it was a really honest and sincere debate between the people who want to completely take over their market and conquer the world versus the master craftspeople who are like, oh, I love this. One person, I have no plans to grow. These are my goals. And the good thing was there was no shaming between the two. It wasn't like, oh, you're just in it for the money. You're just a corporate raider. And the bigger guys weren't like, you're stupid. You just don't even know how to do this. You're just scared. It was such a beautiful discussion of like what to do. And that's the 3-level up question. What do you want first? What do you charge?
Yes.
Like when painters ask me, what do you charge? Well, I'm aggressively trying to double my business and we have 20 employees. You're a single person. I would charge double what I charge if I were you. So it's one of those, don't charge what I charge.
It's so great that you mentioned that too. Jason Paris just posted either today or yesterday in the Paint Ed group. If anybody's not in the Paint Ed group, definitely dive over there because there's some really cool conversations that happen. But Jason posted a question about flow, which is another really cool phenomenon. But I think that is at the center of that argument between those who are after growing the empire versus I'm a master craftsman and I just really enjoy the nature of the work and what we're doing, versus those people that are like, I'm just looking to run a business so that I can have a reasonable amount of time home with my family. And that's kind of where the interest ends. Flow is that sense of enjoyment that you get out of certain types of work or certain activities that you can kind of just get lost in. And I think that's at the center of where we get into these debates. There's the master craftsmen that are really into the work. My friend Stephen Adix commented on that post from Jason, and he was saying like, I like the prep work. And I actually got to do a painting project with Steve because he's local to me. And he is just so in love with the quality. He is the kind of person that he will sit there and he'll spend an hour and a half shining his boots so that they look beautiful, because that gives him that sense of enjoyment. You're going to be motivated by very different things in your business than the kind of person who's probably a little bit more like me, that I love the sense of flow that comes with strategic planning, designing a process and an efficiency so I can move on to the next thing and try to make the next thing better. So I'm like that growth oriented person because, I'm not about finding stability. I really like pushing and reaching for the next thing. That's where these different personalities and different desires behind business come from. So what's your flow? What do you really enjoy? That'll really inform the rest of how you want to.
Yeah, definitely. I mean, somebody can even have, I was deeply trying to take in what Paris posted, because he always, one of the more thoughtful guys we know. And you can almost, I find myself on a dual flow track, which is there's a business where you flow in business and where do you flow with the craft. And flow is basically what I take from Jason's example is between, burned out and boredom, somewhere right in the middle of that sort of thing. And it doesn't have to be just painting. It doesn't have to be just business. It can actually be kind of both, and you can mess with both, which is kind of cool. Last thing, I don't know. Go ahead, Morgan. So,
no, that was good.
and this is so, I love these discussions because in December, on the painters internet, so many discussions about S Corp versus LLC. And it's like, I have a lot of thoughts. It might not matter. It might be too late. A whole bunch of other stuff. I mean, I don't know where some CPAs, some financial people love to dabble into this because it's kind of intertwined. And some people are like, no. This is not me. But quick thoughts, deep thoughts, anything?
Oh yeah, we talk about it all the time. The S corp thing. The short answer is that it's almost certainly going to be a good idea for your business to be an S corp at the point where you're making money. But if you're filing taxes from your business on $50,000 a year, that's what the number of income that you're filing taxes on. S corp is going to start making sense for you right then, because you're going to save quite a bit of money on self-employment taxes. So basically, what you're looking at here is S corp is basically always a good idea because it's always going to save you money on self-employment taxes. You just have to balance, am I making enough money where that self-employment tax savings is going to balance out the added tax bill that I have, because you're going to have to file a different kind of business return, costs you a little bit more. So the point that I found for most clients is if you're filing taxes from your business at around $50,000 a year, you're at that point where your expense to file S corp taxes and maintain occasional payroll for yourself and some tax advising to help make sure that you're really taking advantage of that. Those expenses factored in, it's right around that mark where you're going to be taking advantage of true savings. Definitely by the time you've got those employees and stuff, I definitely say S corp's a good idea. For anybody who's thinking about that, doing it at the beginning of the year is definitely the time to do it. But let's just say you head into the end of the year and you ended up making a lot more money than you thought. As long as you're, before the true close of the year, you can get with a tax advisor that knows how to do a late election, just something that we help a lot of businesses with. You can make an S corp election late. It takes some special process and procedure. You just have to have a tax expert do it for you, and have them make sure that you're checking all the boxes that you need to before the year closes. So it's never too late unless the year is over. So just keep that in mind.
So if I have to condense this down, the dumb, oversimplistic view of sole proprietor versus LLC versus S corp would be sole proprietor and LLC. You have this checkbook and it's basically, you can call it your business checkbook, but it's yours. You take that thing, you give it to a tax person at the end of the year. That's just it. Mm-hmm. With a S corp, you have to pay yourself a W-2 wage, and then it's a different sort of thing. So you pay two different tax rates on that income. With an S corp, you pay yourself a wage and you pay standard employment taxes on that. And then you take something out of the company and you pay a lesser. The advantage there is that you take a draw or a whatever from the company, then income between regular employment taxes, which you would pay as a sole proprietor. And then there's this lesser wage here. Probably stupid, probably a little bit incorrect, but am I sort of like...
You're in the right field, right? So the easiest way that I've found to explain this to everyone is, as most of you know, if you're a business and you have employees, everyone has payroll taxes, right? Your Social Security and your Medicare taxes. When you're a business who has employees that are W-2 employees, the business is paying half of those taxes, the employees are paying half of it. So it ends up being about 7.5% each, right? When you're self-employed, so if you're an LLC, if you're a sole prop, you're right. You're totally spot on that everything the business earns, everything the business profits passes through to you and you're taxed on all of that. And the IRS comes back and says, well, hey, you're self-employed. You don't have an employer paying half of your payroll taxes. So you're on the hook for 15% self-employment taxes on all of that on top of your income tax. Then they came back with these corporate elections. And basically what the S Corp does is it lets you say, I'm now going to become an employee of the business. The business is going to pay a little bit of this tax, and then I'm going to pay a little bit of it as an employee. So I'm going to run payroll for myself. That 15% amount is going to be paid on everything I run through payroll. But then the rest of it that passes through straight to you doesn't have that 15% self-employment tax anymore. So it's the difference between having to pay an extra 15% on every single dollar to just functionally paying that 15%, those payroll taxes on an amount that you run through your salary. The salary bit is where we get really hairy. That's where you want a tax advisor to make sure that you're, checking the boxes, paying yourself as much as the IRS wants you to be paying for your salary, but not paying yourself too much through salary, because every dollar that you pay through salary you're paying higher taxes on it than a dollar that's not going through salary.
And I know a lot of people who run $2 or $3 million companies that pay themselves minimum wage, and maybe they get audited. If they have not, it's probably coming, but they're trying to save that employment tax and then have it all passed through and do that. So again, and if you want, this is where you kind of think back to that net profit discussion. These are the same people who will say, I got a 40% net profit. It's like, yes, but if you had to hire a CEO or an operations manager for your company, you'd be paying them $150,000. So take that out of that pay, and now you're down to about an 8% net profit at the end of that. So that's interesting.
Absolutely. And that's what the IRS is basically, when you're an S Corp owner paying yourself, that's what they're looking at. They want to see, the tests that they have are you paying yourself what you would have to pay someone else through payroll to do this job, for somebody who's working that many hours, who's doing the same role you are? That's what they want to see. Now, the other thing that I do see sometimes is that business owners might think of their salary as maybe they're not taking draws out of the business, which is when the money that you take out that's not through payroll, they're just using their payroll to keep track of all of their earnings. And some people think that they want their salary to be as high as possible because that's kind of what they've latched onto as, these are my earnings, this is what I'm getting out of the business. And you want to be careful, because again, paying yourself more through salary might feel good. You might think like, I'm bringing home a really big paycheck, but it's costing you more money if you're not being, there's a fine line there. It's a very fine point. It changes from year to year for everyone. So definitely a good, you get a lot of savings out of it if you really dial that in.
So you dabbled in it, Morgan, but as promised, wave the magic wand. All of us heathen painters out there just going out painting people's houses, running around with our shoe boxes full of crumpled up, faded receipts. Wave the magic wand. Have all of us do one thing to not only make our lives better and your lives easier.
Oh, good one. There are a series of tools now that are really great and easy to use. They are receipt collection softwares. So one of the big things that we do is we just teach business owners how to implement them. And then we kind of use them in the same way that a business owner might use it themselves to make all of your bookkeeping and all of your accounting stuff a lot easier. And it will save you if you ever have an audit, because basically all you do is you take a photo of every document, every check that comes through the business. Use your smartphone. It's a really amazing tool at your disposal. Don't have to type stuff. Don't have to label it. The software these days can read so much of that really effectively. When you take photos of everything, in an ideal world, you can actually use all of the functions of that software to make the rest of your accounting pretty streamlined. That's what we specialize in. But even if you're not doing that, having that photo record of everything will cover you. It'll also make it a lot easier for your accountant to do taxes if you're not doing really great maintenance of your bookkeeping. So a tool like HubDoc is one, and ReceiptBank is another one. Just basically start taking photos of all of the things that you have coming through. Stop juggling shoe boxes full of receipts. Stop, digging around on your floorboard of your truck for those Sherwin-Williams receipts that you have. Like, just move that stuff online, you guys. You don't have to juggle it by hand anymore.
Perfect. So if somebody, after listening to this, is like, aha, that's what I need, how do they get a hold of you, Morgan Ray?
The best way to get a hold of me is going to be to type in bookkeepingforpainters.com, OOKEE on bookkeeping. We have a scheduler on there. So we have a really nice scheduling platform. Just, you can get onto that calendar on the website and jump directly on my calendar or my business partner's calendar, and we will get you fixed up.
No, that's awesome. So Morgan, seriously, thank you for doing this. Normally, all this knowledge would be spread in person at all these industry events and stuff like this. We are not doing that for the time period. So I'm hoping this will be a sort of nice sort of, second best as well as we can. And we hope we can resume these things too, because you were at an in-person event here and you can see faces when they're introduced to some very simple things that could possibly change your life. And that's what I think both of our missions are with this stuff too. So, so Morgan, thank you for this. Thank you so much for taking the time to do the show. We're going to do it again, obviously. Thank you to Bookkeeping for Painters, and also thank you to the PCA. All of our sort of missions are aligned here. We're all trying to do the same thing. We're just trying to get out to the people and do this in the meantime. So thank you so much, Morgan. I really appreciate it. And till next week, guys, we'll see you then.
Thanks. Bye, guys.